See the game last night?
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning, everybody. This is Mark, and we're back here for the morning call. It is Friday, a rainy Friday in New York City. We've had an interesting week and a half under our belts. Basically, the market has found the longest pullback we've had all year, and we actually penetrated below the 50-day moving average yesterday, but we closed above it. And with the number this morning, which was basically in line, we're now a little bit above, a decent amount above the 50-day moving average. Was it a buying opportunity that you're not going to get again? We'll have to wait and see. We'll certainly get it again, but the fact is that might have been the pullback everybody's waiting for. Not as severe as everybody thought, but we'll have to see if the stocks actually react accordingly. I know that the indices reacted nicely. They're up a little bit this morning. We'll have to see if the stocks start to actually come back accordingly. You know, you had a slew of industry groups, stocks in the industries that touch key moving averages. You can look at the banks, which I said, as long as the banks hang up there, you're not really going to get a severe pullback in this tape. And you look at Goldman Sachs, which is quite frankly one of the leadership stocks in that sector, touches 21-day moving average, 3 days down, pull back below the 21-day, but yet it closed above its 21-day, and it's up a little bit this morning. Back probably to resume its uptrend, or at minimum a little bit more basing pattern. Same with JP Morgan, and you could just go down the list, Citigroup, even AIG in that category. Hovering in the top third of the trading range, they look fine. The most interesting trade, in my opinion, yesterday was actually the currency trade, the YCS. Lots of money was getting out of that. You can see it's actually now a bearish pattern. Is it going to touch its 200-day? We'll have to wait and see. But it's a trade that a lot of hedge funds have been in, and the unwinding was actually taking place. And the opposite of that is the FXY. So if you don't look at that on a consistent basis, it might be something to put on your radar if you haven't really been watching it accordingly, because it might start trading a little bit more than it has in the past before. It was just grinding higher on the YCS accordingly. Individual issues, you know, yesterday you had NFLX trying, possibly looking like it was possibly breaking down. Maybe it touches its 200-day moving average. It seems to me it's just basing, healthy basing. And that goes across the board. Amazon, basing. You can just see the tails that are going off on Amazon. Lots of indecision going on. It looks like a buy area 262, sell area 270, 272, 273 will be actually a technical buy with some volume across the board. Apple, not even worth mentioning, but comes down. It really cannot get any composure at all in this tape. And, above at 255, it seems like, as long as it stays below there, it seems like a short every time. 235, 234-ish seems like a buy, which we'll have to wait and see if that remains to be seen. I know those shipments, I think, were light overseas, according to some analysts. Google, something I've obviously been looking at. I keep looking at the best in breed and trying to find the opportunities. Unfortunately, Google's not that. It's best in breed, certainly. It didn't give you that perfect opportunity, which would be that key moving average, which would have been the 50-day. Didn't really touch there. It's up a little bit this morning. See if it can get composure. Not sure if it does, but above 274, I think it becomes interesting again. Home builders, the REITs. We've been talking about this for a few days. You could see the IYR. I got involved 2 days ago. Right at the 200-day, and obviously went below, and now is trading above that. Yes, based on yesterday's action, stock has really gotten hit pretty nicely, and it's one of those that, again, you love to buy stocks, what you consider still best in breed, on big severe pullbacks, and this pullback basically goes back to almost the beginning of the year. So it basically has pulled back its entire gain, and so to me, that's something that I think needs to be watched. From that perspective, from the REITs, and then XHB from the home builders it has given back about 2 months' work. That's what's happening in this tape. The question is, are some of these stocks going to basically regain some composure to make new highs? I'm not so sure about that. There's cross currents in the air. I think you just got to be a lot more specific. I'm not personally putting on a whole lot of swings. I think you got to be a lot more flexible in what you're looking at. These last 2 weeks, not that a little bit more difficult to navigate, a lot more volatility, which I think is nice from a trading perspective, to have a little bit of volatility. I'd like to see this volatility continue for a period of time with nice up moves, nice down moves, and nice intraday moves for us to be able to take advantage of. And I think that's in the cards. I think we're probably going to make one more push to highs or close to it, and I think that might be it for a while. The indices cannot keep going on this pace of, quarters of making anywhere from 3 to 7% gains. It's not realistic. We saw what happened in the Nikkei the last few sessions, last few week and a half. So you got to have the yellow light on, understanding that these cross currents are going to continue, and I think the volatility is going to actually continue to peak up there. VIX is right around 18, 19, maybe it gets to 20, 22, which is not out of the ordinary. But we'll have to wait and see. This number today, right in line, does it put new buyers back on the table? I think so. It's just a matter of how these things react and how they work. Understand, we keep going from passing the baton from sector and industry group. It keeps happening. As long as it keeps happening and the market really doesn't do too much damage and holds its key moving averages, I think we're okay, and the trend is your friend. I've been saying that all year round. The last week and a half, it was the first time I've reduced my positions in droves and really have remained relatively flat and just taking cash flow trades. I'm remaining in that category, yet I'm leaning a little bit more to the bullish side after yesterday's action and today's morning move, but skeptical and taking my calculated plays across the board. Other ideas I'm looking at, I know a lot of people have been looking at Tesla. Interesting, but it was interesting around 90, around 98, 99. I think you'd have some resistance from other stocks that really have been acting well. Soda, yesterday could have been the day that you need to digest it. It needs to digest a little bit. We'll have to wait and see. GMCR, I know, is another one that people like to play. Above 75.50 might be interesting from a technical point of view, from a trading point of view. So I have to wait and see. I think there's always individual plays to look at. Don't spread yourself out too thin, and just be a lot more strategic and wait for your prices, because I think they're going to really, you're going to have some volatility. I don't think you need to chase anything on the upside or the downside. Good luck today, and I'll talk to you all later.